Welcome to this elevator pitch for Talanx. My name is Carsten Werle and I'm Head of Investor Relations at Talanx, and I would like to guide you through the key essentials of our firm. Talanx and the mutual which stands behind Talanx were founded in 1903 as an insurance mutual for the German iron and steel industries. And from there, the whole firm, as it is today, developed. Still today, Talanx is a company which is very much dedicated towards B2B clients. Nevertheless, in 1953, as you see on this slide, we have also tapped into the private customer business, which we developed from there with a focus on Germany and with international core markets in retail. The best known part of our company is presumably Hannover Re. And you see it's still a very young company. We founded Hannover Re as an in-house reinsurance company in 1966, and we brought it public in 1994, so 18 years earlier than the parent company Talanx in 2012. In between, there was the acquisition of Gerling, a major industrial insurance company based in Cologne. What should you know about the strategy of Talanx? What you find on this slide is what we first time presented in November 2018 on our Capital Markets Day, and it also was named as the Strategic Agenda 2022. And it has in particular three key pillars. The first one is the enhanced capital management. This means we have a special focus on not only achieving the minimum return on equity or cost of equity in our divisions, but more than that. And we also try to focus in particular on upstreaming cash dividends to the holding to improve our dividend profile as a company. The second point is that we have developed divisional strategies for all our four divisions, which you also find in short brackets on this page. And the third, what is of course also in insurance, a very important issue these days, is that we put a lot of emphasis on digital transformation. And all this is accompanied by a very consistent sustainability approach. And you find a lot of detail on this also on our internet page, as well as in the sustainability report of Talanx. What should you expect earnings-wise of our company? For 2021, we have the target to grow our businesses by around 5% in terms of premium. You will see that the net investment income is probably a bit under pressure from a lower yield environment. This is why we only target for 2.5% return on investment. But still, we would expect to end up at the upper end of target range from 800 to 900 million for the group net income. And this would correspond to a return on equity of above 8%. Dividend is a very essential part of our investment story. We want to pay out 35 to 45% of IFRS earnings to our shareholders. And since the IPO, we have only seen increases or at least stable dividends versus the previous year. If you ask for 5 arguments why to invest in Talanx, you might consider these. The first one is we are a very diversified insurance company, and we are majority owner of one of the very best reinsurance companies in the world, Hannover Re, and we have a growing share or growing contribution from our primary insurances, which was in the first quarter of 2021, 54% of group net earning before corporate operations and consolidation. We are a strongly growing company, above average, driven by our cost leadership in 3 out of 4 divisions. We are a resilient business, Solvency II ratio of 206% before transitional. We have already touched on our net income outlook for 2021. For 2022, we even target for a group net income of above 1 billion euro. And last but not least, it's the dividend policy with our ambition to only follow an upwards-only strategy. Thank you very much.
Hi there, since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.